Good morning from Los Angeles. Welcome to Power Hour Fridays, every Friday actually, at 10 a.m. Pacific, 1 p.m. Eastern, where I get to discuss a lot of things. It's a weekly show. Thank you for the support. I will answer questions if there are any towards the end after go through a few topics. As the headline or the title of the episode indicated, a lot going on this week, a lot on the economic information release front, and Jackson Hole meetings are going on. Mr. Powell, the chairman of the Federal Reserve, was talking today, at 7 a.m. Pacific. So markets got a little volatility introduced to them after his speech. I think it was pretty ambiguous, to be honest with you. He said what he's been saying after the Fed meetings, which we had one this week anyway. But more importantly, the government had to do some adjustments for their economic data they've been releasing for the past year, specifically on the inflation and but more importantly on the unemployment front. I've been saying this, that unemployment is actually not what they're saying that it is out there. And kind of proven, and guilty as charged on their part. So I have some sort of handle now on the migration from my Schwab account to Thinkorswim. If I were to give Thinkorswim a grade, if Schwab was 10, Thinkorswim is a 5. I have my setup correctly, but every label is at a different spot. The buy orders, sell orders, it has some positives, but mostly I need to get used to it. But then at least I have charts, unlike last week. So again, if you have any questions, please save it for the end of the show. One favor, channel is growing. I appreciate it. As you all know, I'm not doing it for YouTube money. There is no YouTube money. My other channel is doing fantastic. Hitting about, 193 or 194,000 subscribers already, which is great. But again, this is information and education purposes only. It's not trading advice. I have to get that disclaimer out of the way. Although I do put my trades out periodically. And I'm also on after hour. There is a massive delay in after hour. Plus, I think this week Robinhood and after hour had a little bit of a communication problem. My account equity was fluctuating. It's a $3,000 account, was fluctuating to $2,000 at a time. I don't know what's going on, but I'll post that on the YouTube community page after the episode. And what else? That's about it. So please share the links when they go out. We put out a ton of great information, really, mostly on the macroeconomic conditions, specifically on the federal debt and things like that. These are important issues for all of us, okay, regardless of what you're doing. If you have a W-2, if you're an independent contractor, if you're a trader, if you're a swing trader, position trader, or I call them butterflies or hummingbirds, day trader. These economic, data that they put out move markets, and you have to pay attention to it. You really have to. And more importantly, create conversations, with your friends and relatives and family at the dining room table and, at the water cooler. As opposed to talking about, God forbid, what's happening, politics are something difficult to talk about, obviously, because we're so polarized these days. I will have a little bit of a segment about politics as well. But, talk about the economy, talk about how it's affecting you, talk about how inflation is affecting you, talk about how lower interest rates are going to affect your pocket. Are you going to benefit from it? Are they cutting interest rates because of certain reasons, which I will discuss shortly? So, that's it. That's the opening, and I hope you enjoy it. Please share the YouTube site. It's at Sergio Avedian. Share the videos. Please put a thumbs up. Supposedly YouTube algorithms like it. I appreciate the support. So with that said, I will answer questions. I see some questions already. With that said, let's get into the first topic. The first topic is something that which I've talked about in the past few months, is U.S. dollar going to lose its reserve currency status? There was a great tweet, and for the last month, everybody has been expecting over a weekend, bombs to fly in the Middle East between Iran and Israel. It hasn't happened. Why hasn't it happened? I think this caught my eye. I think this is pretty much connects the two dots, right? It says, why hasn't Iran retaliated against Israel? Iran doesn't want to F up the real big war. What is the real war? Well, the real war is the reserve currency status of the US dollar. I've talked about it. The BRICS are really trying to break it apart, right? The BRICS are, US dollar is used for everything. And the Saudis stopped the petrodollar now. They'll be able to sell and buy oil with local currencies such as euros and yuans and whatever you want to call it. There is an effort to be made, but this reserve currency status is the only reason that we can keep printing money and spending money and have our debt go up $1 trillion every 100 days and nobody cares, right? If we lose our reserve currency status, watch out. Absolutely watch out. But it's going to be very difficult for a Chinese yuan or the euro of the Europe or a Japanese yen or whatever it is to replace the US dollar. It's just not going to happen. This has been going on for the last, I don't know how many decades. And that's the advantage US has. But US also uses that power, the reserve currency power of the US dollar, in some nefarious ways. And this tweet really absolutely nailed it. Eterol, on Twitter, I'm on Twitter, by the way, at Sergio Avid. It's in the show notes. Please follow me. I'm quite active on Twitter. What is the power of the USA actually based on? It is the US dollar financial system, a fiat currency, meaning the US dollar system backed by wars, power projection, and bullying. I mean, this guy is talking my mind here. Not backed by gold, real production, and which I'm going to talk about what part of the economy is manufacturing and production versus anything else, real production and commodities. It is a system built on debt and money printing and the privilege of the reserve currency of the US dollar that has guaranteed the need for US dollar government securities. Well, I couldn't have said that better myself. And then he went further and he put up 7 points, which I completely agree with, right? So that's why it's going to be very difficult to remove the US dollar as a reserve currency of the globe. But the move has started. These things don't happen overnight. The BRICS are really going at it. They're even creating a SWIFT system for themselves for transferring trillions of dollars around the globe, obviously. But then, why I don't think is imminent, and why I don't think is going to be an issue for the next at least decade. It takes time. It takes time to get rid of the US dollar. I mean, every country that we deal with, right, is trading in US dollars. All the oil is traded in US dollars. All the import and exporting is done in US dollars. So we do hold the power, obviously. But as far as the 7 points, I'll just read them honestly, because I don't think I can say it better myself. The US economy is like a big, loud friend at the party who everyone knows. Its size, stability, and the rule of law make the US dollar a safe bet. Is it though? It's like choosing the most popular kids' currency because, well, everyone else is doing it. Okay, that's one. That's called economic hegemony. Number two, this is going away. Actually, it has. After 50 years, the petrodollar, deal or agreement was not renewed by the Saudis. Supposedly our friends, but I'm pretty sure we'll create a war somewhere over there and then, bring him back to the table. Petrodollar system, oil, the lifeblood of modern civilization, which I hate really. I don't know. Like, I'm in California. I don't know why every house is not doesn't have solar panels up top. I mean, we have 360 days of sun in California. Is often traded in US dollars. Well, that's kind of going away now. This isn't just a preference. It's like a global agreement that says if you want to fuel your cars, planes, and the economies, you'll need some of these green pieces of paper to buy and sell oil. Agreed. Reserve currency status. Being the world's reserve currency means countries hold US dollars as part of their foreign exchange reserves. Absolutely. It's like having a universally accepted gift card for global trade. And who doesn't love a gift card? I mean, this guy just hit the nail on the head. Number 4, liquidity and financial markets. Let's talk about that. The US financial markets are deep, probably the deepest. Although, we did have a little bit of an illiquidity kind of an issue over the last couple of weeks, when the triple Qs dropped about 14 percentage points in about 2 weeks. That was definitely illiquidity there, liquid and as open as a book you've read too many times. This liquidity makes the US dollar a go-to for international transactions, which I'll be talking about shortly in another segment about why it happened, and then about should we even pay attention to the carry trade that we're talking about. And supposedly that was the reason why the markets took a dump and then came right back though. Go for international transaction investments, and let's be honest, for parking money when you're not sure what else to do with it. Number 5, the exorbitant privilege. This is where he absolutely nails it. Economists love this term because it sounds fancy, but it means the US can borrow in its own currency. That's the machines, the printing machines. We can do whatever the heck we want, which is like having an endless credit card, absolutely, with no interest. Well, those days passed. ZIRP has ended, and we know what happened with inflation and how they had to bring back the interest rates to reasonably high levels. Although I think it's pretty average. 5% is pretty average, actually, if you look at the history of interest rates, until it's time to pay the piper. Will we ever pay the piper, though? That's my question. With debt growing, federal debt growing $1 trillion every 100 days, pay the piper. But that's another story, which I agree with. The privilege allows the U.S. to run deficits that would make other countries' economies collapse under the weight of their own debt. Absolutely. Check out Argentina, check out Venezuela, check out Turkey, check out Greece. I've been saying this for years now. I think we're a much bigger version of these countries, but the only advantage we have is, 1, the US dollar is the world's reserve currency. Number 2, we have the printing machines. We can print all we want and create all the debt we want without any repercussions. Although, if the economy slows down now, which I'll talk about shortly, what will happen? Inertia and network effects. Changing the global reserve currency is like trying to change the language of international communication from English to, say, Klingon. This is funny. It's not about the language. It's about all the infrastructure, education, and cultural shifts to support it. But then the BRICS are doing it. They're getting their own monetary transfer system now, currency transfer system, which is SWIFT in our world, but they're working on it. The US dollar has this network effect where its widespread use makes it even more useful. And this is I think what is absolutely the reserve currency power is used around the globe these days. Geopolitical leverage, 100%. The US dollar gives the US geopolitical leverage, which is like having the biggest, shiniest toy in the sandbox. Want to sanction someone? Hit them where it hurts in their access to US dollars. What happens? We cut their access to US dollars. They can't trade because all the import-export trading and oil purchases and everything else is done with US dollars. We drain them of their blood, basically. Why do we do that? We do that with Iran. Not that Iran is an angel, but we do that with Russia. We do that with everybody that pisses us off. What do? We slap them with sanctions. 50 years ago, we slapped Cuba with sanctions. Look at the country. It's absolutely in shambles. Look at Venezuela. Look at Argentina. Anybody we don't like, we just hit him with sanctions. When we hit him with sanctions, we cut the access to dollars. They don't have dollar reserves. And what do? Their currency turns into toilet paper, right? I mean, this tweet probably for me was the best tweet that I've seen for a long time on Twitter. So I appreciate it, Eterol. If you guys want to follow him, please follow him. So yeah, that's, US dollar reserve currency status and its power. Immense, right? But It probably won't happen in my lifetime, but in my kids' lifetime, I think the US dollar will lose its reserve currency status, which is the next 25 years probably. And I think the repercussions are going to be massive because of what we're doing now with our budget deficits, with our federal deficits, with fiscal policy being absolutely in shambles, right? But then monetary policy follows fiscal policy, right? These idiots in Washington, I mean, so they just spend money that they don't have, and then the Federal Reserve has to just create money, right, to close that gap. And that's why our deficit is 35 trillion, just turned 35 trillion, and then going up a trillion every 100 days. In the next year, it'll be 38 trillion, and then it'll be 41 trillion. It just doesn't end. This doesn't end. And so thank you, Etirol. I think this was the best tweet I've seen on Twitter all week when it comes to economics. The next subject I'm going to talk about is inflation. I mean, I've been talking about inflation and the hocus pocus part of inflation, that the government says, yeah, inflation is only 2.8%. Everything is good. It used to be at 4%, but now we're taking it back to 2.8 because we raised the rates from 0 to 5%. You all hopefully know who Milton Friedman is. He's a Nobel Prize winning economist, and he's gone now. He's passed away. But Mark Benioff tweeted one of his quotes. Mark Benioff is the CEO and founder of Salesforce.com. CRM is the symbol. And this sentence just sums it up perfectly. Inflation is made in Washington because only Washington can print money. Well, he said this like 30 years ago, right? We had an inflation situation in the 80s when Paul Volcker was the Federal Reserve chairman, and he absolutely, if you guys think this was raising rates, short-term interest rates in 1987, 88 were at 25%, people, because inflation was absolutely out of control. But then I agree with this 1,000,000%. Washington, irregardless of who's in charge. There was a period of where Clinton was working with the Republicans because Republicans had the House and Democrats had the executive branch, and the Republicans had the legislative branch. They worked together. They passed like balanced budget amendments and things like that, and then gone. Whoever came after that, literally whoever, Democrat, Republican, zero discipline in Washington, none. They spend the money they don't have. Not only they spend the money they don't have, they borrow and spend money. And this is exactly, this hits it also, it hits a nail on the head. Washington spends the money, right? That's fiscal policy. We have absolutely no discipline in fiscal policy. If I was running my household with that type of fiscal policy, I would have declared bankruptcy for the last 10 years in a row, probably, right? But then the problem I have is I don't have the printing machines. I can't put zeros on the ledger. In fact, you all should watch that Jay Powell interview that he had on 60 Minutes a few years ago. And the guy, the journalist, literally asked him, he goes, do you really print money, like cash, paper money? The guy goes, no, we stopped doing that because we need so much of it. The machines are not fast enough. He said, we just add zeros to our ledger. Think about this, people. Can I add zeros to my ledger? Can I call my bank and says, oh, hold on, just give me another week. I'm going to add a few zeros to my bank account, and then I'll send you the mortgage payment? Think about it. This is what's happening in Washington, right? But 100,000,000%, this is correct. Inflation is made in Washington because they love spending the money, right? The money they have in tax receipts, the money they don't have in tax receipts, the money, they just love spending money. On what they spend, God knows. Obviously defense, obviously education, which is, well, we know where our public education system is. All those trillions spent, not sure. We lag the world in science and math. We're like 28th, right? We're behind some third world countries, right? Where's that money going? And but yeah, they create the inflation through fiscal policy, right? Because now the Federal Reserve has to print the money to balance the budget, right? So if you're spending 4 trillion, let's say, for example, and the tax receipts and all the receipts by the IRS or the federal government is 3 trillion, okay? So we have a 1 trillion deficit. Where's that money going to come from? That money is spent already. It's the budget, right? The federal employees have to get paid. The defense contractors have to get paid. All these people need to get paid. That's why it's great to be in business with the U.S. government, because they will never bounce a check. Because why? Because the Federal Reserve will go, turn the machines on, add the zeros to the ledger, and pay everybody. And then kick the can down the road and say, oh, look, now our deficit has hit $35 trillion. And, the ROI, by the way, the return on investment on that deficit is absolutely horrendous now. About, during Second World War, $1 of deficit produced about $10 in GDP growth. Then in the great financial crisis, even then in 2008, they had to print money, right? They created the TARP. Even then, the return, the ROI on the borrowed money was good. It was 1 to 4. Guess what? What do you think? What do you guys think it is now? For every dollar we borrow, right, it adds only 56 cents to the GDP. We're at a deficit both ways now. Not only we're borrowing money, but our money is not returning. It is not even 1 to 1. It's 1 to 56 cents. So how long can this go on? I don't know. I honestly don't know. Yeah. So Milton Friedman, rest in peace. Great little tidbit here. See, this is what you guys should talk about at your dining room tables. Serge said Milton Friedman said this, and what do you think we're doing here? And then create some sort of conversation as opposed to talking about the Kardashians or some shit. I don't know. But the world is there because we don't talk about these issues anymore and how it affects our pockets. So the next topic I'm going to talk about is the headline of Power Hour today. Okay? What was the headline of Power Hour? Is the government lying about economic data? What do you guys think? You think the government's lying about economic data? I'll give you guys 10 seconds to put yes or no in the chat. Yes. First of all, I really don't pay any attention to what they're saying. I mean, you have to, because it moves markets, right? And for the last year, the government was saying that unemployment is fine. We have very low unemployment coming out of the pandemic, where the unemployment, when the unemployment took off, right? Obviously, we were at home, right? And there's no jobs. And then coming out of the pandemic, we printed 7 trillion, pumped it, and then sent people money, and then now the unemployment has been ticking up, right? But the government kept saying, no, unemployment is fine. It's under 4%. It's the best of all time. Election year, shenanigans. I don't know. You guys can give us a connection with that. But then they had to pay the piper, right? And on Wednesday, the revisions came out. So what they do is every month they announce this is how messed up our economic data release system is. They announced the number last month, let's say, right, in June. And then the next month, when they announce the new numbers, they have revisions from the previous month. And every month it has been revised down, right? And then at the start of last year, they changed the internal dynamics or mechanisms of how they, figure out inflation. Now they go like, inflation is going down. It's 2.8%. I'm like, in whose world? Do these people not go buy like food and necessities? We're not talking just rent. They don't pay rent, and they don't fix their cars, and they don't send their kids to school, and they don't buy clothes. I don't get it. Like 2.9%. I talked about this in the previous Power Hours a million times, and I put up the data. It's hocus pocus. It's my favorite word on the planet now. Everything is hocus pocus these days. You just go, 3-card Monte right at the, New York subway. The get game, you're never going to win, right? The only guy that knows what's happening there is the guy that's shuffling the deck. And so the NLRB, the BLS, Bureau of Labor and Statistics, comes with this Wednesday, right? And they go, current situation, all right? So I'm going to read the right side of the screenshot first, give you the details in a second. So this is another, Twitter. I follow these people, Kobasi Letter. I highly suggest you guys do it. These things are free. Just follow it on Twitter. It's the same cycle every time. All right, let's get this. Let's see what kind of cycle we're talking about here. First, the data is reported as a beat. Beat meaning it's better than expected, because expectation is everything is on Wall Street, right? Wall Street works on expectations. If you like earnings, let's say, right? If you're expecting this and you report that, it's great. If you don't beat expectations, then you tank, right? That's how and that's also the economic data. That's how it's released by the government, by many different factions of the government. First, data is reported as a beat. So let's say they're expecting 4% inflation. I mean, unemployment rate, they go 3.9. And the market goes, oh, it's wonderful. Okay, let's go. Let's, hit the buy buttons, and then everything is fine until next month. First, data is reported as a beat. Then it's revised lower when everyone is focused on the next month's data, just like I said. So 1 month they put the data out. The next month when they're putting the data out, oh, by the way, last month we were not correct. We have to revise it. But then nobody pays attention, and the market has moved up another 5% in that month. So they keep like inflating this bubble. Not that I'm saying the market's in a bubble. You guys know about my negative bias for the last, 6 months now. So we pointed out this for years now. I absolutely have. I have done in my own friend circle. I go like, how do you know this stuff? I go like, well, I just read a lot, and then I just, read the tea leaves and make sense out of things, or try to make sense out of it, because I don't think the government's truthful. Plus, I come from the Middle East. Okay, I was born in the Middle East. Do you all think I believe the government? The governments that I lived under until I was like 15 years old? Do you guys take one? I think it's exactly the same thing, except that, see, over there in the Middle East, I could bribe the local cop for me not to give me a ticket, hand him a $20 bill, and then he'll let me go. Try to do that with the highway patrol here. You can't. But the game in the US is played at a much higher level, right? You can't bribe the local cop for them not to lock you up. But who you can bribe is like the top echelon of politicians and judges and all that stuff, right? The game is different here. You need a lot of money to move your stuff around here. So that's what I have learned. So I don't trust the government in the Middle East as far as I can throw them, and I don't trust the government here whatsoever, irregardless of who's in power, by the way. I just don't trust the government. So, and then here's what came out on Wednesday. U.S. jobs additions. So every month, okay, they said unemployment is great, 3.8%, 3.7%. Economy added 400,000 jobs, 200,000 jobs. Expectations are beat. Market keeps going up. I'm like, okay. And on Wednesday, they couldn't lie anymore. They said U.S. job additions revised lower by 818,000. How did it get to this level? Largest revision since 2009, right? How is that? How do you miscount 818,000 human beings as employed, and then the next month you go, oh, hold on, we miscounted. We just kind of had 818,000 people disappear in our shuffle. The shuffle, the three-card Monty, the card shuffle. I'm going like, how is this creating any trust in what the government says? And U.S. unemployment rate is up to 4.3%, highest since 2021. And I'll talk again. That's why today, at Jackson Hole, Wyoming, where all the, data heads are meeting, including Jay Powell of the Federal Reserve. He had that ambiguous speech. Oh, we're going to follow data, but he definitely is setting up for interest rate cuts now. And then I'll talk about that shortly, what it may mean to you all. Unemployment rate is up to 4.3%. By the way, unemployment bottom at 3.5%. However, it has been at 4.3 all that time while they were saying it's 3.5 and adding jobs, because now we just lost 818,000 people, which we just miscounted it or somehow. 5 out of the last 6 job reports have now been revised lower. Do you see what the game is now? You announce the numbers, it beats, everything is good, because look, the Federal Reserve more than anybody needs the stock market to go up and stay up. Why? Because 50% of our tax receipts come from stock sales. Okay, so when a Jeff Bezos sells $5 billion in stock, which he did at Amazon, he nailed the top on Amazon at $200 a share. He literally sold $5 billion worth of shares. Well, even he has to pay at least $1 billion in taxes on that long-term capital gains tax, right? So that's where the money is coming from, to the coffers of the Federal Reserve. That's where the money is going. It's not because GDP is growing. It's not because people are paying more taxes. A record number of Americans are now working multiple jobs. Well, I know that from my other channel, because how do I know that? Uber, every earnings call that I listened to, they said from last year over year, active drivers on their platforms is at 7.5 million now globally. It's a global number. Okay. Last year, this time, 5 million. That's a 50% increase. 50. You all wonder why you're not making money driving Uber and in the gig economy? It's exactly because of that. Now, I'm not even counting the illegals that are driving with fake IDs and stuff. We're just talking active drivers on their platform. This is just Uber. Figure out all the other gig companies, right? So people are working multiple jobs. No kidding. Everybody with a W-2 and their uncle, because of inflation, because of high interest rates, because of everything else, their W-2s are not enough. So what do? They have to go get a second job, or if they want a little bit of a freedom, make a couple $100 a week, they go, deliver food or drive people around. US dollar has lost 25% of its purchasing power in 4 years. I've said this a million times. That is the true inflation rate right there, right? So 10 years ago, if you took $100 and went to Costco, all right, you could have bought like 7 items, maybe 8 items, because everything was priced like $11.99, $12.99, right? You could have even maybe sometimes bought 10 items, right? Because everything was like $9.99 to $10.99. You take that same $100, go to Costco today, you will only buy maybe 5 items. There is your inflation right there, right? So the true rate of inflation for me, as far as I'm concerned, is about 6 or 7% a year. So $100, right, 4 years ago is 25% less now because you have less buying power. So every year you're losing 6 to 7%. That's why people on Wall Street say cash is trash, right? You have to get that return. You have to at least make 6-7% on your money just to keep pace with inflation, the true rate inflation, not the hocus pocus 2.89% that the government says. And 11% of credit card balances in the US are now delinquent. Well, that has been going up. It's not at an all-time high yet, but it's pretty close. I think it's about 18% is when we hit during the GFC, Great Financial Crisis. Highest over a decade, but not as high as that. And as we know, right, with the carry trade fiasco that we had, that was the excuse. I don't think that's the excuse. I think the markets are figuring out, and markets are 6 months ahead. So markets had already priced in a soft landing. Soft landing has never been done, honestly. But there's definitions of that, meaning unemployment doesn't go through the roof, inflation is low, economy is producing, GDP doesn't go negative, and then it's like we land the plane softly or we crash land, right? How many times have we had soft landings? So market had priced in soft landing. Then in one day, market decided, no, wait a minute, I think there's going to be a recession. Let's price recession pricing on stocks. The NASDAQ 100 dropped like 15% in 2 weeks. And then, mind-numbing, they just brought it all back up to like nothing has happened. I don't know. Well, time will tell on that one. But so this is the topic of the Power Hour today. You guys believe the government? Government? No, I don't buy a word of government says. Okay, I will answer questions if you guys hang out, please, please, please. So the next topic I'm going to talk about the elections. So again, this is not political commentary. I really couldn't care about either party. I know who I'm going to vote for, but I'm not going to obviously. But from the way I talk about things, you guys probably will guess. So last week when I showed this, Kamala Harris had actually the lead, because what happens is that they're going into the DNC convention every time. One of the candidates goes into a convention, right? Trump had a lead on her when they went to the RNC convention, and then the DNC convention, you get a boost, right? Coming out of the boost, though, coming out of the convention, the numbers just will. But there is a website, by the way, called Polymarket. You guys can literally go bet on who is going to win the election. It's like sports betting. I'm not telling you to do it. I'm never going to do it. But that's where the numbers are coming from. So Trump is back in the lead, 53 to 46. Did you all watch Kamala's speech yesterday? And did you guys see who was sitting in the front row? You guys see who was sitting in the front row? Huh? A guy named Tony West. Tony West is the chief legal officer of Uber. He took an unpaid leave of absence to help Kamala campaign. This is where this is going. You guys think about this. Chief legal officer of a publicly held company, because Tony West is the brother-in-law of Kamala Harris. All right. But that's a different subject altogether. So Donald Trump now leads Kamala. This is as of today. Leads Kamala Harris by 7 percentage points in the 2024 election. This comes as people react to DNC and marks Trump's biggest lead over Harris. But it happened because Kamala Harris, first of all, I don't think she's an economist. I think she definitely needs great help, whoever the Treasury Secretary is going to be, because I don't think she has a clue of what she's talking about when it comes to economics, because they asked her, like, what's inflation? And she was like bumbling and mumbling. She couldn't figure out what the heck the question was. So Kamala Harris's odds began declining after she unveiled her economic policy. Okay? Again, this is not political. I'm not taking one side. I'm just reporting. She then backed Biden's tax proposal, which accelerated the decline. All right. Even her own people, she's backed by big money, by the way. The LinkedIn founder, a lot of the VC people, for some reason, are backing her up with huge, huge dollars. She raised $500 million in the last 30 days. So that money is not coming by fives and tens. You guys figured that out. It's coming through super PACs with hundreds of millions of dollars getting pumped in there. But the other question is, like, why do these people spend hundreds of millions of dollars to get a job that pays them $450,000 a year? You figured that out yet? All right. So, in her economic policy, she said, I read this and I was like, okay, I deal a lot with taxes because I trade, right? Most of my stuff is on short-term capital gains. I do have a long-term portfolio, obviously, which I deal with that as well. She was like, she said she will tax unrealized gains. I'm going like, how does that even function? It's unrealized. How can you tax something that's unrealized? Like, I bought a stock at 10, stock is at 20. I'm still holding it at the end of the year. I haven't sold it, right? Because you have 1 year, 1 day for it to convert into long-term capital gains, which the rates are a lot lower. They're at 19% for those. And for short-term capital gains, it's your actual tax rate. Like, if you're high earner, you're paying 35% tax. That's going to be your tax rate on all your trading. So you guys need to study that as well. But how can you tax something that I haven't sold and taken a loss or a gain on? I have an unrealized gain. I'm like, sure. I think that needs to be discussed further. And this is the proposal. So she endorsed Biden's 2025 capital gains tax proposal, which will raise long-term capital gains tax rates to 44.6%. It's 19% now, people. So what do you think that will have? What kind of effect that will have on the stock market? I mean, look, when Jeff Bezos sells $5 billion worth of stock, he's paying 19%. That's going to go to 44.6%. I don't know, man. I don't know. I mean, look, that may help with the deficit, though, right? But I think I pay my share. I don't want to pay 44.6%. This is long-term capital gains. This is 1 year and 1 day. Think about this. This would mark the highest long-term capital tax rate since 1922. I am pretty sure this is all going to get sorted out. Okay. The plan also proposed a 25% tax on unrealized capital gains for wealthy individuals. Kamala, I'm not wealthy, right? I mean, I'm fine, but I don't know what wealthy is. But if I bought a stock and 6 months later and at the end of the year, right, it's doubled, I have unrealized gains, meaning unrealized. I haven't sold it. I haven't put the profit in my pocket yet. It's just numbers on my statement. How are you even going to tax that? How can you tax something that's unrealized? I don't know. Should this be approved? Well, I am pretty sure this is going to take some time to sort out. I just wanted to tell you guys that if my long-term capital gains tax rate goes to 44.6%, I am leaving the country. and there are people in the chat who know where I want to retire. I can't pay 44.6% and deal with inflation and deal with everything else that's going on. I just can't do it. I'm happy with 19%, at least on long-term capital gains. I don't mind paying higher taxes on short-term capital gains. And a lot of people say, why do you do everything short-term, less than 1 year and 1 day? I go, if you're paying taxes, that means you're doing fine. I'm not against paying taxes whatsoever at all. But if that's going to go to 44.6 and then possibly unrealized gains are going to be taxed at 25%, I can't do it. I just can't. But this will get sorted out. We'll have 70 days to the election. I'm pretty sure all this will get sorted out. Okay. So I'm not holding her to it, but then she did say this is her proposal, and that's why I think her lead went from a lead going into the convention, to a trailer position coming out of the convention. So we'll see how it goes. The next topic is something you all pay, and I don't have rent, but I have a mortgage. Luckily, I have a 3.5% 30-year mortgage. Saving my ass, actually. Like, imagine buying a house today with 7% or 6.5% 30-year fixed rates. You just can't afford it. That's why housing sales are tanking. Nobody can afford a house these days. But most of you pay rent. What has happened to your rents? Is there any inflation in rents? You guys think? Is it 2.9%? Do you think it's true, what the government says? So median asking, this is just the median, okay? This is the average. In LA, if you go get a 1-bedroom place, just a single bedroom, okay, in a decent place, we're not talking Beverly Hills now, just like average, around my neighborhood, actually, which is suburbs of LA, it's $3,000. $3,000 for a 1-bedroom, $2,500 maybe. And if you go into the ghetto, it's probably not less than $2,200. Okay, so I'm going like, and so this is the U.S. median, like the median price in the U.S. overall, all states, all neighborhoods. Median asking rent prices in the U.S. hit $1,481 a month in Q2 2024, an all-time high. So that's part of inflation. What was that 2 years ago, 3 years ago? I bet you it was like, I don't know, probably $1,000 or $1,100. So every year, right, goes up 5, 6, 7, 8%. And the government says, don't worry about it. Inflation is only 2.8%. I'm like, in your basket, you even changed that basket, government. In your basket, most of the time it's X food and energy. Who doesn't buy gas and who doesn't eat? Not even sure. In the basket, they have like computer parts, airplane parts, chips, computer chips, I mean. How many of those do we buy every day? I'm not sure. Talk to me about my car insurance. Talk to me about my rent. 2.9% my ass. But anyway, since 2019, median asking rents, there it is, have spiked by a staggering 56%. I was actually low. I said 1,000, 1,100. It was like 850 then. That's why we're at 1,481. This is unreal what's happening here, man. As a result, median asking rent now accounts for, ready, 29% of the average monthly disposable personal income. So that means so 1,481, right, is 29% of your average monthly income. So let's say 30%. That means you need to be making $5,000 a month, okay, before everything, just to be able to afford that 1,481 rent. Now think about this. In LA, in my neighborhood, 1 bedroom is $2,500. Let's go with a round number, 3 or $2,500. Okay. So you have to earn, that's 30%. You have to earn $7,500 a month, basically $100K a year, just to live in a 1 bedroom. How's that going for everybody? Yeah, great. So again, these are not complaints. These are just foods for thought for you guys to discuss amongst yourselves and amongst your communities and your families, because if you have kids, they're going to face this. I mean, I'm not going to have my kids live with me, unlike some people when they're 30 years old. No, get their asses out of there. But by comparison, this share was significantly lower in 2019 at 24%. So that keeps going up 56% since 2019. So that's 5 years. Divide that by 56 by 5. That's 11. That's 11% rent inflation people are experiencing. Has your earnings, has your income or W-2 or paycheck has gone up 11% per year just to cover this up? Forget the rest of the stuff you're paying double for. No, that's where we are at the moment. In other words, rents have risen much faster than post-tax household income. Yeah, there you go. All this is inflation. And government goes, nah, it's only 2.8%. We're in the right direction. We're going to cut rates now, which I'm going to talk about on the next topic. And so I've said this a million times. An economy that does not produce anything tangible, anything physical, right, is a shit economy. Just take my word. We used to manufacture stuff. And here's the graph, but then I'll go with the left side first. The U.S. economy is now almost entirely driven by services sector. I think this number is low, but then they're doing a percentage of GDP. I think our GDP is about 80% by service economy. Service economy meaning, nothing tangible manufactured. All the shit you guys buy on the internet, all the services, all that stuff that that the GDP basically in the US as of last year was 27.5 trillion, 28 trillion with a T. Our debt was at 35 trillion. So we're running at 120% of GDP now. Our interest rate on the debt is at 3.2%, which is at an all-time high because we're paying $1 trillion a year in interest only, just on the floated money that we have out there around the globe on that 35 trillion, right? Trillion a year. Could we use that trillion a year to do some good in the country? Help people who want to manufacture shit in the US? Oh, of course not. Why would we do that? We just pay IOUs up our what. So US economy is almost entirely driven by the services sector. The services industry now accounts for 72% of US GDP, up from 60, okay? By comparison, in the 50s, the good old 50s, when the US was the US, services reflected just 47% of the economy. Obviously, the internet came around, all the social media stuff, all that stuff has changed. Advertising changed, the way people sell stuff has changed, brick and mortar died. Look, all these things, right? But the key is manufacturing. We used to manufacture cars. We used to manufacture refrigerators. We used to manufacture TVs. We used to manufacture all that stuff. Where'd that go? Export those jobs to China. Awesome. Wonderful. By comparison, in the 50s, services reflected 47%. On the other hand, the manufacturing sector share in the US GDP has declined from 27% in 1950s to 10% currently. Yeah, I think these numbers are pretty goddamn accurate. So meanwhile, the ISM manufacturing PMI index has shrunk 20 of the last 21 months. Of course, we're not going in a recession. Everything is fine. Government says everything is fine. Don't worry about it. I mean, we're all good. And here's the chart that, picture's worth 1,000 words. Look at that blue line. You know what the blue line is? The blue line is the services economy, part of the GDP. So we're at 72%. This goes back to 1950 for people who cannot see, but I'm sure you'll see, later, or if you zoom in or whatever. So we went from, you guys are ready? In 1950s, services part of the economy was literally 7%. See, you guys see the lower left-hand corner of the chart? 5-ish, a little bit up over 5, about 6-7%. Now we're at 72%. Our GDP, whatever it was those days, because we were borrowing and putting the money on fire, we were manufacturing things. We were building things. We were the best, stuff on the planet. But it was close to 30% of GDP in the 1950s, and now we're down to 50%. We're still manufacturing stuff. Don't get me wrong. I'm not saying nothing is being manufactured, right? But then even that part has gone into its own recessionary periods because it's so expensive to start a business and build some stuff in this country now, right? From labor to rents to insurances to everything else, because you have to factor all these in. So what do you guys think is going to happen if we go in a recession, right? What happens to a service-based economy where 80% of the GDP is servicing, right, sector? What happens to the economy when the service industry slows down? Meaning people don't go out to eat as much. People don't go to the movies as much, and people, they cut their discretionary spending. What do you think is going to happen because we don't manufacture anything, right? There's no net. We're flying without a net, right? That's why every time we get in a recession, the shit hits the fan. And add to that all the borrowed money, everybody living on, plastic, right? Look, man, this is the writing on the wall. I'm presenting you guys all these facts. You agree, you don't agree, but talk about it. And then put your household in order if you think you're here. So, next topic I'm going to talk about, a lot of people ask me, Sergio, I want to follow your trades. I'm like, look, man, I'm struggling because I have my bias is negative. I made some decent money actually on the last swoon, but then I lost some money on the way back up because I honestly did not think it would be like a V bottom and then market will go right back to where it was. But then market is what? My mentors always said, market is a mechanism to make everybody wrong. I was dead right on the downside and I was halfway wrong. By the time I cut my losses, I was like, I had enough. I'm not going to get bled to death. So I'll share with you guys my Schwab account next month, my actual trading account. It's fine. Where I'm up like 120% for the year. I was up close to 200% for the year, but then when you have a negative bias, it's tough to buy shit. So you guys want to be successful in trading? Okay. You know who this lady is? First of all, do you all think House members, senators, or House members, representatives, okay? They're the ones that write the laws. Do you all think they should be allowed to trade stocks? Okay. I don't think so. Now, there's a proposal actually in the House to stop people from trading, actively trading. And Nancy happens to be the most actively trading. Now, she doesn't pull the trigger. She doesn't have a Robinhood account that she goes by NVIDIA or Avago or Apple or whatever. She has obviously a money manager who has done wonderfully well for her, right? So let's not throw her under the bus completely. But she knows what's happening. She's like the true insider of what laws are about to show up and what's happening, because I am sure behind closed doors they do have a lot of meetings and talks. So again, this is not insider trading, people. So, but then there is a Twitter account actually. You guys can go follow. So what that gentleman does is he absolutely follows her trading, because under the laws, even her money manager has to come out with the trades, what they're doing, right? That money manager always buys way deep in the money options on these high flyers, NVIDIAs and Avagos and Apples and Amazons or whatever. This guy follows Nancy Pelosi's trades, or Nancy Pelosi's money manager's trades. He has a Robinhood account that he puts up on Twitter, right? His account is up 300% in the last 2 years, because, and then there is a delay, by the way. By the time it's announced, I think there's a 30-day delay that they have to announce all her trades. But even that way, the reason the money manager is buying deep in the money calls, because there is not much premium in there, and he or she, whoever they are, they buy like a year and a half out. So there is holding period in there, right? So you guys can easily follow it. Yes, you may not, because she doesn't, buy the low and sell the high or whatever. It's not that. The trades are public information. So just this week, when the market tanked and did a V turn, V bottom, and literally is at an all-time high again look, market went down 10% on the S&P 500, up 10% in a matter of a month. Is that normal? I don't think so. But that's not the point. So the point is Nancy Pelosi is up over 10 million in the market this week. Her salary, right, people? It's like, I think, $200,000. And just that's on NVIDIA. She has Avago. She has, I'm going to start following those trades. Seriously. I can't do better than that. I really can't, right? And so all of you, I suggest, log on to Twitter and follow that account. It's not the Kobe letter. It's some other guy. But he purely started doing this, following Nancy Pelosi's money manager's trades, and then he's making a killing. So there you go. But I personally don't think House members and senators who write the laws when it comes to these things fiscal policy, right? I don't think they should be able to. I think they should just put everything in a trust, which I think that you're supposed to do as a president. I know you have to do, and I'm pretty sure Nancy has done the same thing. But whoever the money manager is making the right calls. I mean, look. I mean, do I blame her? No, the laws don't restrict for her to do this. And overall, I think she's made her net worth, I think, is over like 300 or 400 million dollars. Don't quote me on this. I may be wrong. You do your own research. Google what is the net worth of Nancy Pelosi. She's been holding this $200,000 a year job for, I don't know how many years, 20 years, 25 years. And in those 25 years, definitely you don't increase your net worth to $400 million by collecting your paycheck from the government. So yeah, that's it. That's the topics today. So I'm gonna go to actually my charts. Look, my charts are still not, I still don't know how to draw lines and all that good stuff, but I'm gonna add, this is my new Thinkorswim platform. It's horrible compared to what I'm used to from Schwab for 8 years. It's horrible, absolutely horrible. And then there it is. Let's add it to. Okay. All right. So I'm going to go through the usual charts. I cannot draw lines still. I don't know how to draw lines. I'm sorry. But at least I can trade now, which is good. So I hope you all can see. Let me go through the usual, topics. Wait a minute. Is this even working? I hope it is. Yeah, it's working. Okay, so this is my account. It got migrated from Schwab to Thinkorswim. I absolutely despise it. I don't like it. But I'm gonna go to bigger charts and then go through, the usual stuff. Hold on one second. Okay, so let's make this large. I learned how to do that. I hope you guys can see this, right? So this is the S&P 500. S&P 500. Here's, the swoon that I was talking to you guys about. I mean, look what happened, right? S&P 500 went from 560 to 510, almost hit the 200-day moving average. At least I have my moving averages, Bollinger Bands, volume, MACD, all that stuff that I used to have before. Hope you all can see this. And, we had that little bit of a carry trade situation, which I talked about last week. You guys go check that video out, how the Japanese interest rates and the carry trade between the US dollar and Japanese yen is affecting all this, or has affected supposedly. Yeah, so that's where we are. And what has happened is that after that swoon, right? I mean, that was pretty appreciable. It was about 11% decline in about 2 weeks. And then in the next 2 weeks, we're right back to where we were, about 560. And that's and this is the triple Qs. Triple Qs are the NASDAQ 100. I mean, same thing almost, but NASDAQ 100 hasn't reached its all-time high yet. S&P 500 has. NASDAQ 500 had more of a precipitous drop. It went from about 500 to 425-ish. Even broke the 200-day, but it stayed above it. And then after that, we're right back to 480, which is, how things are in these days markets. Let's look at NVIDIA's earnings are coming out on the 28th. So NVIDIA, actually, I did trade. I made decent money on NVIDIA. I bought this options actually about 92, 93, but by the time 15 minutes went by that day, I sold it. If I hadn't sold it, I would have gone like 6x on it, but then you don't know. My bias was negative. So NVIDIA basically went from 136 to 92 in a matter of 2.5, 3 weeks. And then from 92, we're back to 130 almost, right? So the volatility is there for you guys to make money. This is Apple. Apple, same thing, right? Massive, drawdown from 235 to 195, and then right back to 225. This is Amazon. Amazon actually is the weakest out of the Mag 7, I think. Yeah, I mean, it's just struggling, really. It's just for some reason. But Jeff Bezos sold at $200, $5 billion worth of stock. And, I mean, hey, Meta is the best out of the Mag 7. It's basically in all this, it just went sideways and it's about to break out again on a long-term basis. If I was to buy any of the Mag 7, it would be Meta, Microsoft. Again, weaker. I mean, you guys can see the underperformance and outperformance, right? Compare Meta, this one, to Microsoft's charts, right? I mean, picture's worth 1,000 words. AMD had a swoon. And then, a lot of the stocks are not that highs yet, but indexes are back to their highs. Tesla, same thing. Had the crack. It came from about 270 range down to 180 range and then bounced to 220. For me, these are all dead cat bounces, but then now, all this damage that was done needs to be resolved somehow. How's that going to be resolved? Either by going sideways. These V bottoms don't hold. My experience and my experience only. If anybody has got experience in these things of 30 years, you can email me, Sergio@sergioavadian.com. We can take the conversation over there. And then, even my, I don't even know how to, I did create a watch list, and here's my watch list. This is my watch list. I'll go through them by name. Affirm is one. Actually, one good thing I like about this is like when I click on it, it changes the chart on there. So I kind of like this chart. It's kind of going sideways. It's in a downtrend still, but then breaking above the 200-day, breaking above the 50-day. I dig it. AMD I showed, Amazon I showed. This is one that went nosebleed, absolute nosebleeds. There was a gentleman on Twitter. He was talking about this at like $2, $3, $4, $5 a share. I didn't really pay attention, and then I paid attention when it started. When it had a day of, it went from 20 to 30, and then it hit 40, and I'm going like, shit. Where was I? But then it's AST Space Mobile. He's still very bullish on it. I think stock is in a nosebleed area. It needs to kind of digest all these gains, but you should pay attention to it. Avago is another one. This is what I like about actually Thinkorswim. I can click on it and then get it. Avago is one of Nancy Pelosi stocks. Look where it stopped, people. It stopped exactly at the 200-day average. I mean, these things I've been talking about to you guys. You should be reading the books. Those are where the support levels are, resistance levels are. Stock went from 175 to 130, and then what? Right back to 170. Alibaba has been one of my favorites. Actually, it's doing a lot better. So I've been talking about Alibaba for 2 months since I started doing the show in the 70s, mid 70s. We're up to 85. I have stock in Alibaba, stock, not options, long-term account. This is the Bitcoin. It even kept my downtrend line. Well, here it is. I guess I can draw lines, but I'll have to do that for next week. This is the Bitcoin double whammy ETF. BITX is the symbol. So if Bitcoin goes, 1%, this will go 2%. I trade this as opposed to the Bitcoin or MicroStrategy, actually. So if Bitcoin does go to 100,000, this thing is going to be like $100 a share. So guys, pay attention to it. Here's one of my most favorite stocks. I've been talking about this for months with you guys, last 2 months. Kava. Again, you don't have to be a genius to figure these things out. The first time I ate a Kava was when the stock was about $30 last May, and I wasn't even doing the YouTube channel then. I ate it first time in California, and I said, I love this. I wonder if they're public. While I'm eating, I looked at it. Yes, they are. Kava was the symbol. They are so far superior to Chipotle, right? I mean, it hits my taste buds anyway. I like that kind of Middle Eastern flavor. I bought the stock. I bought some shares in like 30 to 40 range. Nothing major, just to be participating, in the success of the company. Because then I read about it, that they're expanding. And here you go, right? Just by eating there once, and then I eat there all the time now. There are lines out the door every time I go to Kava, right? It proves itself. You don't have to be a genius to figure these things out. Their earnings came out yesterday. Here it is, another, up to 125, right? I mean, at some point I will sell it, but then I don't want to get caught in that 44% long-term capital gains tax rate. I have to figure that out. This is Chipotle. Nothing, right? I mean, see the difference? Okay, this is Coinbase. Again, I mean, broke down, just kind of dead cat bounce. Another one of my favorites I've been talking about, if you guys been following me, Carvana. Look, I'm a technical trader. I mean, some of you may say, okay, this is garbage company, you know, whatever. It doesn't matter. Picture's worth 1,000 words. I've been talking to you guys about Carvana since it was 80, right about here. That's when the show started. That's when the channel started. Stock goes sideways, earnings come out, it pops, goes sideways, higher highs, higher lows. What is the trend? Trend is your friend. Trend is up. These things, you know, last, right? You don't have to be right every single time. Even if you buy the high, I mean, it's going to be very unlucky for you that you bought the high, right? And that was the ultimate high. And you could have done that in Carvana, right? 3 years ago when it was $400 a share. Then it went down to $5, right? But then when things turn, you guys need to pay attention. There's another one of my favorites, First Solar. It's going sideways. I like these types of setups. Okay, it's going to probably go a little bit more sideways, but when it breaks out about 230, you guys got to be on it, just like the Tesla trade that I gave you guys a while ago. Goldman Sachs, that's Google. Goldman Sachs, right there, right, had a swoon and came right back. Financials will do well if they start cutting rates. This is one thing that I talked to you guys about plenty of times before it actually broke out. This is called, IWM is the ETF for Russell 2000. If this market's going to keep going higher, I think the IWM, the smaller cap stocks, which they do better when in the short-term interest rate cuts are coming, which they are. You know, the Powell said that today in September they're going to start cutting. These kind of stocks do really, really well, right? Small cap stocks do well, and that's why IWM, I think, is definitely something for you guys to consider. Because if you look at, I even learned how to do that, people, now. If you look at 3-year chart on IWM, okay, and then go actually further, IWM actually is not even close to making this is a weekly chart of IWM. It's not even close to making an all-time high, right? It's not even close. So, well, I mean, if you compare this look to an S&P 500 or a triple Q, you guys will find out how much IWM has room to go. And I think, definitely should be part of your portfolio. Small caps definitely should be. Then MicroStrategy is the Bitcoin surrogate. Talked about this. Michael Saylor, stocks going sideways. Why? Because Bitcoin is going sideways. If you guys look at Bitcoin chart versus this one, it literally follows back and forth. But this is like a steroid pump, turbocharged version of Bitcoin, right? And another one that's doing well, Netflix, obviously. I mean, look, markets. These are the stocks that you guys want, right? Outperformance is the key. You guys need to figure out performance, and it's pretty easy to figure out. I showed NVIDIA. Everybody's favorite these days is Palantir. Palantir, see? I mean, these are the, market's not at an all-time high. The recovery pace, right, when sell-offs happen on outperforming stocks is going to be a lot better. A lot better than pretty much anything else that you guys will touch. Roku has been doing well. It's coming out of the death, right? If you guys look at it, in fact, I'm going to show you one more before Roku. I'm going to show you guys PayPal. I'm going alphabetical. PayPal, look at PayPal's chart, right? Okay, so, I mean, these are the types of setups, because if you take PayPal back 2-3 years, you guys will see how much underperformance PayPal was under. Okay, look at this. This is the type of stuff that I'm talking about. You guys see the setup, right? These are the setups that I love. Let me make this chart a little bigger for you guys. Look at that setup, right? A multi-year base. I mean, we're talking like we're going back to 22, 21 here. Stock has been going sideways, finally turning around. On a long-term basis, you guys need to be watching at least, or trading or buying and holding PayPal, okay? On every pullback, safer to buy. Stock used to be, I think in the over 200 a share. Now we're down to 70, right? Every company goes through this, and you guys need to be on it. And you guys need to find these long-term basing setups, okay? And then Roku is another one. Again, look at the base, right? this type of base that we're talking about. I mean, this thing has been basing since March, April of 2023. It's like a 2 year and a half, right? Now it's breaking above its 50-day and 200-day. These are the things you guys need to pay attention to, right? So PayPal and Roku are my longer term favorites. Let's see. Well, this is the Serve Robotics that I gave you guys at $2. Okay. I'm trying to buy it. As you guys can see, one other thing I like about it on Thinkorswim is it's just showing me I'm trying to buy like 50 calls, 50 meaning not $50 calls, $10 calls, 50 of them September 20th. I bought a few. You know, the market's not coming back for it to give it to me yet, but I'll probably just splurge and get it. You know, that stock went from 2 to 24 in a matter of a week and a half. Why? Because NVIDIA invested in Serve Robotics. I even interviewed the CEO of Serve Robotics on the other channel, people. Okay. I have no inside information, whoever is watching, but I kind of put 2 and 2 together. These little robots are all over the place in LA. See, again, you don't have to do that much research to figure these things out. And then obviously, right, stock goes to 24. At 24, it's worth $1 billion. Well, company's not worth $1 billion, obviously. I actually had a ton of stock at 192. I cleaned up at around 8 and a quadruple, and then watch it go to 24, killing myself. That would have been my year, actually. I had 12,000 shares with $1.92 cost. And then I shorted at 19 and then covered at like about 11. So now, you know, I'm going like, okay, this digested, low volume. I think, you know, I don't know if it's going to go back to 24, but I'm pretty sure resistance is about 14.5, 15. And then again at 18, you know, reasonable. Another long-term, you know, chart, not as good as PayPal and Roku, but, you know, Shopify, just kind of watching, you know. And then let's talk about the interest rates. What's happening to interest rates, right? So this is TLT. This is the inverse version of interest rates. So when we were down here, so let me put the 1 year one up. 1 year, 1 day. So this is so when this chart's going up, that means interest rates are going down because it's inverse related to interest rates actually. And this is kind of telling you guys the story that the Federal Reserve is definitely going to start cutting interest rates. Another favorite of mine that I showed you guys. And then, you know, that's why my watch list is this long. And I will actually take a screenshot of this, put it on the community page. Another one was Upstart. We talked about this. You guys can go watch the old Power Hours. I started buying the stock at 30 the day earnings came out. Stock is at 42. All right. Trade options, trade stock, do whatever you guys need to do. You know, again, do you see the pattern here? Massive, massive base, good earnings, huge volume, breakout above the 200, above the 50, above the 20. Yeah, these are the setups I like. And then I'm not a day trader. I'm a swing, definitely position trader. And these are the setups you guys need to look at. These are the most powerful setups. If you don't do anything else, just watch stocks that base and then break out. And the last one is going to be Zillow. Again, another one. Not as hot as UPST or Upstart or Affirm or Roku, because those are just started going, right? You can buy those on any pullbacks. But again, you know, the risk reward is pretty low, 3 to 1-ish kind of a thing, or 4 to 1 on these. And, you know, it's not rocket science. And then if you guys have any other stock ideas that you guys want to ask me, I'll just go back to my charts and then do it. See, now I'm lost. I don't know what the hell is going on there. Oh, I'm just going to make it small so I can see you guys. Okay, here we go. All right, let's go into some calls. Not calls, questions. Let's put myself here. Okay. This guy is on after hour. Okay, this guy, that's me. Good morning. Why don't you use Fidelity? I don't know. I've been used to Schwab for 20 years. And then they bought, I think it's TD Ameritrade, I think, or whatever it was. And then they merged. So I'm like, okay. There's Lynn here, Serge with Sergio, Jeffrey Bezos, you know, and I'm not there yet. I believe a Black Swan event in our near future. I don't know. Do you have that crystal ball? Tell me when, and then I'll let you know what to do. Fed finally lowers interest rates. Yeah, they're definitely going to lower interest rates in September because even they couldn't lie after that report, unemployment report revision came out. Kuber says yes, must have been a glitch. No, it's not a glitch, nor must it. Can you imagine if it was Trump administration? Well, I mean, excuse me. They're using that Uber math. Yeah, possibly. He said this was the highest revision since 2009. I wonder who the president was then. No, they had revisions like this, but looking at revisions, it was the highest revision. This revision actually is, from previous few months, not the numbers from 2009. No, that was done wrong. We need to vote on politics, not emotions. Absolutely. We need to vote with our pockets, Jonathan A. We don't want communism. We definitely don't want that. I don't know which one would be considered communism, honestly. I don't know. Unearthed treasures. I'm not going to lie. I'm not surprised. Most politicians lie. Yeah, that's a good one. There you go. Let's put that up. I'm not going to lie. I'm not surprised. Most politicians lie. Yeah, that's their job. But really, they wouldn't have as much of an issue if they acknowledged that there is lower class. Yes. Agreed. 100%. Let's go. Don't you give up our yeah, this is a good comment. Stop by it's not, I don't think it's a foreigners issue. I think what it is that is BlackRock's, Jeff Bezos's, and Bill Gates buying all the farmland. They bought every single house, a single family home, and that's why the rents are where they are. They're literally playing Monopoly. Okay, you just buy the deed and then you spend money and put hotels and houses on your property, and then every time somebody shows up, the rent gets jacked up. That's what they're doing. That's what they did. Private equity did it. BlackRock did it. Bezos did it, buying thousands of homes, grabbing it at a time, and then they control. It's literally a monopoly, which is bullshit. Yeah, here we go. Pre-COVID, I was paying $1,500 in Western New York for $1,500 for a decent house, decent neighborhood, decent. There you go. Now I got evicted from a house costing $3,500 with utilities in Tennessee. My landlord was making me pay 9 averages. Yeah, there you go. See what I mean? That's called rent inflation for you people. This is a good one. The government lied about something. In other news, water is wet. Yeah, sorry. Yeah. Washington got bought out. Yes. Well, not corporate lobbyists. Lobbyists are doing their job. They got bought out by corporations. Yes. I can't say more than that other than say yes. We manufacture fake news. Okay, I agree. So I'm a bear. Yeah, I'm definitely a bear. I think they keep cutting interest rates. Actually, the market's going to top shortly. Look at the history. You guys need to study this. Why does the Fed cut interest rates? Everything is great. Fed never cuts interest rates if they think economy is fine. They only cut rates if they think we're slowing down or going in a recession. And market being 6 to 8 months ahead, they have to price that in because market's not pricing in a recession. So that's my opinion only. But in that negative bias, are there stocks like Serve and ASTS and UPSD and whatever? Yeah, that's why, not everything goes down, but indexes in general, I think, are going to at most go sideways, if not go down by appreciable percentage points. So you're a bear? Yes, I'm a quasi bear. I'm not a full-on bear yet. Market will tell me when I need to be a full-on bear. Go look up who really won the war in Afghanistan. Yeah, that's we don't want to get into that. There you go. I agree with Weezum on this one. No government employees. No government. Yes, I agree. It almost is. Almost, yeah. I don't think it is, but almost is. I hate to break it to you, Zoom, but they do. Both parties. Yes. Both parties are shit. Okay. Vic helped me. Actually, Vic, thank you. I got on a call after last week, and he helped me with the setup. I can, but it's not as easy as it was. I have to run through shenanigans, and then he keeps the line, and then when I go to an intraday, it just blurs up all my lines. I have to figure this out. Actually, I'm thinking of switching, Vic, so you know. Or I'm just actually going to call Schwab and say, I've been like one of your top active traders. Give me my shit back. That's about it. That's where it's going to be this weekend because I'm like, I almost like pushed two wrong buy and sell orders today because I was really actively trading the S&P puts. I made money, don't get me wrong, but it wasn't like it's too many things to click on. When Schwab was one click, I'm done. I'm like, no. He's a tech noob. Me? Probably. If you're talking about me. Oh, there you go, people. Let's take a look at it. There is an ETF that tracks Nancy's trades. It's called NANC. Holy shit. See, I'm learning. Let's take a look. Are you guys seeing this? Even if you're not seeing, doesn't matter. NANC. Are you serious? Unusual whale sub. There you go. Look at that. Huh. I'll be damned. There you go, people. NANC. Let's look at the 3-year. That's Nancy's bank account right there. I mean, look, you know what? It pretty much mirrors, the triple Qs. Okay. So if you had bought the triple Qs, you know what I mean? You would have done the same. So I don't know about this ETF. I think triple Qs would be as good or better, probably more liquid anyway. Yeah, it looks like it. But good to know. Thank you. Much appreciated. Let's go to. Okay, let's go back to the questions. Okay. What's up, money man? Not much. Kuber, so they just mentioned. Yeah, they do, but I mean, it's like. Yeah. Okay. It tracks. There is an ETF. Okay, but triple Qs are pretty good too. So triple Qs, I think, would have done as good or better. Wisdom says, yeah, I did buy you Kava, and you should have bought the stock. It was 50 then, and I even told you, I think. You're watching Lily. Okay, LLY. We'll take a look at that chart in a minute, and I got to run. I've been burned a lot being a bear. Yeah, bear markets don't last that long, stairs up and, elevator down, express elevator down. So that's it, but when it comes good. But yeah, being bearish is not the right thing to do. Let's look at Lily. Somebody said Lily. Okay, how do I do that? Okay, I do that like this. Okay, Lily. Let's look at Lily. Lily, aren't they the ones they did the Ozempic, right? Yeah, absolutely. Look at this shit. Oh my god. This is Ozempic, by the way, people. Ozempic, you guys know the fat burning thing that they came up with this drug and it was something else and then it turned into completely something else. Yeah, stock is $1,000, all-time high. See? This is an uptrend right here. Market goes up, market goes down, completely outperforming. This is it right here. These are the types of things you guys want. By the way, this goes back, to March of last year. This is a year and a half. Stock was $250 a share. It's $1,000, 4x. Now, I'm not telling you buy and hold, do whatever. You could have done that. You're doing wonderful, right? But it's outperforming the market by far, right? How much is the S&P 500? This stock is up 4x, okay? And steady uptrend above its 200-day, above its 50-day. What is there to say? It goes up, goes sideways, breaks out, goes sideways, breaks out. At some point, it will top. Okay, who cares when it stops? But now, right, this is what you guys want. In this year and a half, could you have made money in this? Even if you didn't catch the low and catch the high. Take the middle 50%, you still would have made 2x, 2.5x on your money. So enough said. Find uptrends. And if you guys are bearish, find downtrends because they both exist. You don't have to be just buy and hold and do this and do that. There's cuts both ways. So with that said, I'm going to say adios. And you all be safe out there. Make some money. Let's short Lily Sergio. Okay. Yeah, I mean, the risk is pretty low here. It went from 1,000 to 750. It's right back to 1,000. Double top, possibly. The risk is, risk is low on the short side now, on Lily, actually. You know where your stop is, new high, right? So, yeah, we could short Lily, if you like. There's many ways to skin a cat. So with that said, I'm going to end the stream. Hope you enjoyed it. Please share. Please put a thumbs up. Please share the rest of the videos. I put shorts out. I put videos out. Please share it with your community. I think I'm doing a decent job. And thank you for the support. And I will see you guys next Friday. 10 a.m. Pacific, 1 p.m. Eastern. See you all then.